thought you lost me. Well, what happened is they stole our Instagram accounts. So just as kind of like a public service announcement, welcome back everyone to the Chart Addicts live streams. If you've been following us on Instagram for many years, then you're probably wondering where our account just went. And truthfully, I'm wondering the same thing, Zuck. Because what happened is there was an attack on our pages. My personal Instagram got taken down, and then the Chart Addicts Instagram got taken down, and then the FX Summit Latin America page got taken down, and it was all a targeted attack because people hate to see us winning, just like we did at all the FX Summit events in Colombia that we just threw. So in case you guys weren't following along, because it was really hard to on social media since they took our pages, but FX Summit, we were still posting updates. 2,000 people in Colombia. Go ahead and do a quick, put a one in the chat for that. We had 1,000 people plus in Bogota, and then we had about 300 people that couldn't even get in. I'll show you guys the videos here in just a second. On top of that, we went to Medellin. We did another 700, 800 people there. Absolutely nuts. 3 weeks notice. First time ever in that country. We absolutely shut it down. FX Summit Latin America will have over 10,000 people guaranteed after what we just saw. So London is next on the list. Then we have Barcelona, Croatia, Lebanon, and then Dubai. We're going to be doing some workshops with Raja Banks. Hopefully, we'll be doing a few workshops with Swaggy C and a few other big names that we'll announce. So make sure to stay tuned on the FX Summit official Instagram. #1 conference in the world for traders. Thank you, everybody that showed up and showed out to that event. Thank you to our incredible sponsors, Funded Forex, for making that event possible. And of course, make sure to grab your tickets to the FX Summit 2024 conference in Dubai by heading over to the link in the description below. Okay. We're live. We're good. Awesome stuff. Okay. Yeah. 2,000 people in Colombia was crazy. I want to see if I can pull up a few pictures here just to show you how crazy this was. So, oh, can't do that. One second here just to pull this up. They got to send me a security code. Well, they're taking our sweet time. All right, so while that loads up, we have a few things to talk about. So obviously, I haven't really kept my eye on the charts for a few weeks now, and so just got back on to see what's happening. There's been a lot of talk. People said that Nvidia lost $300 billion in a day of their market cap, which is a record, in case you guys don't understand. $300 billion is bigger than the size of 99% of the companies in the Nasdaq 100 index. What is Coca-Cola's market share today? Or market cap? 306 billion. The entire market cap of this 100-plus-year-old company gets wiped out in a single trading day. That's more than the GDP of most countries in the world. So what exactly happened here? In case you guys haven't been following along, NVIDIA had an absolute blowout in 2023, just this massive growth when it was announced that America was going to start to go through or go towards a policy of chip manufacturing or chip independence. Basically, the AI revolution is going to depend on two things, which is the hardware, the actual physical devices that's going to run this entire system, and then the softwares. Now, software is being built everywhere. There's layers being built. ChatGPT is a software layer in the AI space. Even some of the cloud computing AI software is going to be a very, very big and popular industry. But only a few people can actually play in the hardware space because these chips, which is basically like the brain center of all these different computers, these things require not just, let's say, lithium and cobalt and some of these like minerals that are only found in 5 countries in the world, but they also require expert, how do I say, expert innovation to make them cheaper and faster than their competitors. They need an enterprise sales team to be able to get these things out to everyone in the world, to be able to make billions and billions of dollars. $300 billion is what NVIDIA made, I think, in Q3 or Q2. Right? So they're making a lot of money. And so the chip revolution, I think, is it's like one of those kind of boring things, but it's the biggest play that's happened in finance, the biggest play that's happened in investing, at least in the past 10 years, was Nvidia's massive growth. So I think the market's finally starting to wake up to the fact that, hey, I know that this is going to be a very successful company. I know that Microsoft and Amazon and Tesla and some of these and Starlink, they're all going to be relying on these GPUs.
They were starting to just wrap it up.
So even though they have this massive future potential, right now they don't really have enough on market to justify this market cap being so high. Now, realistically, I see a bounce here in NVIDIA pretty soon. Okay, so if we just kind of use this handy dandy Fibonacci tool, I understand why some folks are panicked. It really doesn't look good, but I expect NVIDIA to drop maybe below the 90s. I kind of want to see it just below 90, around 80, and basically anywhere between 83 to 88, that range. And then I want to see it bounce back to the upside. So if we can hold that 80, let's call it like the 83 to 88 price level, and if it doesn't keep dipping below that, very, very good chance of a massive rebound here on NVIDIA. And I'm confident that NVIDIA at a discount here, I think, is a steal. If you guys remember, we were just under 100 like 2 weeks ago, 3 weeks ago. So I know that, we're back at 102 and people are sort of panicked. We were just here. I think the real panic was how fast the market share got wiped out. But realistically, this is not a crazy place to be. And anybody that was watching it run back up to 130 after seeing it touch 140, they're looking at these prices as a massive fire sale. This is a massive discount for all the institutions who want to invest in NVIDIA, because if you're willing to buy this thing at 120, if you're willing to buy this thing at 130, why wouldn't you buy it at 100 or 90 or 85? Right? So keep in mind, institutions are always thinking, is this a discount? And do I believe in this thing long term? I think the belief in long term, guaranteed it's baked in. The discount, we finally just got like Christmas in July. So we'll run through those. Obviously, we have a Fed meeting later this week or later this month, which we'll talk about. So let's go through data releases for the week, and then I'll show you guys some trades that I'm watching. A lot of the trades that we called before I went ghost, they're playing out probably better than ever expected. Euro USD is getting ready to fall off this cliff. Dollar's getting ready to rebound and head back. Magnets don't lie. Super secret magnet indicator, undefeated, undisputed. USD JPY hasn't really rejected the way I'd like. So this one I'm actually putting off to the side here until we see a recovery. But USD JPY, as soon as we recover back above the 142.7, I'm back in longs, and I'm back in longs heavy. Personally, not financial advice. Euro JPY, I'm expecting a recovery on this as well. You can treat UJ and EJ very similarly. Clearly, the price action's a bit different because UJ has already filled this wick, kind of created a double bottom here. UJ or EJ hasn't even touched the wick, still at the bodies here, still respecting support. And so I think that they're both kind of bouncing in tandem because they're being led by the JPY weakness. It's not really what the dollar's doing or what the euro is doing. It's more so that the Japanese yen is just such a shitty currency. Apologies to the Japanese. Hey, I don't run the Bank of Japan. You understand? If I did, I don't know. Maybe they wouldn't be in this mess. But also, it's an impossible problem to solve. All right. So we're going to go through gold here. I haven't looked at gold in a while. We'll talk about those trades. I'm not going to go through all of them. We'll go piece by piece here. So head over to forexfactory.com. This is how I start every week preparing for the trading week. I want to know what's happening, which data releases are about to drop, and I want to filter it based on the currencies that I'm watching, which for now is only the euro, the yen, and the dollar. So let's see what we got here. Pretty light start to the week. Monday, Tuesday, no action. Wednesday, we have core CPI and we have annual CPI. The forecast is 2.6%. Okay, now either I told myself I was going to stop spazzing out on these streams and I was just going to do some straightforward, but they keep pulling some bullshit like this, and I'm going to have to just cook them. So you guys bear with me while I go on this tirade real quick, roasting them for what's about to happen. There's only two options for why they would have a forecast this crazy. 2.6%. Number one, they're lying through their teeth about inflation being at 2.6%, which we all know is true. And they're probably going to use this as an excuse to push for 25 basis point cuts, maybe even 50 basis point cuts in the September Fed meeting. Because right now, the only reason they're not cutting rates is they're like, if we cut rates too soon, inflation comes back. And if inflation's already kind of on the edge, then we can't really afford to take that risk. But with a 2.6% inflation print, we can just print as much money as we want. Now they have fair game to print as much money as they want, people. And so I think this is a bullshit number, obviously. Now the other reason is this is intentionally going to be at 2.6%, which is low, and then we're going to have a miss. It might come out at 2.9, or it might come out at 3% or whatever. And I think that's going to be an excuse for the market to let out a lot of pressure before the rebound comes in, right? So I don't know. I don't trust this one bit. I think that the number is going to miss. I think that even if it misses to the upside, I think the market's still going to recover. And then keep in mind when rate cuts hit in late September, the markets are going to crash. Look at every single rate cut that's happened in the past. I don't know. We haven't even cut rates except for 2022. Or sorry, not 2022, except for QE 1, 2, and 3. So this is 2008 to 2014. You can look at every single rate cut. And what you'll find is that the market crashes every single time. And then 3 months later, you have a recovery. So right now, I feel like the market's going to continue to pump, pump, pump. Even though Nvidia just took a hit, I think we'll see a recovery here. And then once the rate cuts finally hit, that's when the real pressure is going to get taken out. Because if it's going to crash later in the month, then there's a good reason that we pump until then. And so keep in mind, that's what we're seeing here. Now, let's go through Thursday. Main refinancing rate for the euro. This is basically the Fed funds rate. So they're going through rate cuts aggressively. Remember that the Eurozone and Canada started the rate cutting cycle this year, and they actually front ran the Fed. And so this, for the first time ever, Canada and Europe just decided to cut rates without waiting for the Fed. Pretty ballsy move. And honestly, not in their favor. But it's going to be good for Americans who want lower interest rates. 25 basis points. Put a 1 in the chat if you're going to go buy a house because the interest rates went down by 25 basis points. By the way, drop a like on the stream. Let me know audio is good. You people can hear me, or what's the deal? We good? Okay. We have an ECB press conference. Obviously, it's going to follow the rate. So we'll get some more insight there on what the Eurozone is thinking. 30-year bond auction will kind of, the bond market is kind of a good proxy for the interest rate market because people bet on bonds based on how they think about interest rates. If interest rates go up, bond prices go down. If interest rates go down, bond prices go up. So it's like interest rates are correlated with bond yields, and they're inversely correlated with bond prices, if anybody cares. Okay. So let's go through gold. We'll be up here on the weekly charts, and let's go through some of these charts here. So there's really no reason to get way too far up into the weeds here. You can probably stick to the daily. Get all the info that we need. Put a 1 in the chat if we're good to go. Good to go. Data releases for the week. You guys kind of just saw my process. Very straightforward. Just looking at some of the most important key points. Now, I haven't really looked at the charts here, so I'm kind of just catching up myself. I'm just seeing what we can find. Kind of going lows to highs. Pretty good projections here. This is good. That's what I needed. Okay. So we're building up this trend here. So we have this beautiful impulse right here. Nice retracement. And then we get into this range. So now we're in a ranging market. We have this beautiful sideways trend. Now, this is typically an issue unless you're a chart addicts trader. If you're a chart addicts trader, we love ranges. We love ranges. We love ranges. You go high to low. And keep in mind for gold, we're not doing body to wick. We're going wick to wick here. Every instrument needs to be treated as an individual instrument. I know a lot of people are like, well, all trades move the same or all indices move the same. Okay, well, have fun with that. Let me know how that works out for you. I'll just kind of break it down. It ain't gonna be good. Okay, beautiful, beautiful, beautiful rejections on all sides. The range is holding up. All right, so we have a buying opportunity here on gold at 24.78, just trading inside the range, trading inside the range. And for members, this is the same exact thing we do on Nasdaq, where we have the Model 1 and the Model 2. Just so for reference, the Model 1, this is the Model 1 entry right there. Lines up perfectly with the previous resistance right here. Okay, we have just that retest entry. Now, because we've already had so many touches at the top, and we've already had the duck, there's a very good shot that we break through the third time to grab liquidity and continue. So that's why this sort of trade inside the range, it's just got to be moderate risk, moderate risk. Now the Model 2 entry would be a full retracement of that move, which would actually be a break of these lows. All right, it would be a break of these lows at 24.78 all the way down to 24.50. And at 24.50, this is where you would see the reversal back up, all the way back up to 25.20. So that's a lot of room. So there's going to be, even if this thing is going to break through, by the way, you'll still likely get a rejection here at 24.78. So this is a good scalp opportunity. Protect the trade, protect the trade, protect the trade, take some partial profits. And if the market crashes through, you walk away with money. You can enter a second trade, and then you can really make the money on the upside the other way up. Put something in the chats if this is pretty straightforward. Let me know if you guys have any questions. We get asked about gold all the time. Today's the day where we can actually cover. So we missed you, Roy. I missed you guys too, YouTube chats. Want to know a bit of what Elon has for next month until the election. My guy's back. Jeffner, good to see you. Gold and silver sell trade I have. Have fun with that. Keep us keep us posted. I mean, it depends. If you're selling down to 24.50, then yeah, you might be in the money here. Okay. Let's look at Nasdaq. So clearly Nvidia's taken a massive dump. Nvidia is the number one driver of the Nasdaq's kind of market cap or price, excuse me. So I'm looking at the same exact thing we just did on gold. I want to see a deep retracement here. Same thing we covered on Nvidia as well. Anytime the market creates an impulse, it's met with a retracement. Anytime the market has a bigger impulse, these macro impulses, then you have a larger time frame retracement. And the bigger the impulse, the bigger the retracement. The bigger the impulse, bigger the retracement. So the only thing that's kind of giving me a little bit of pause here is that we're creating lower highs. But up until then, everything else is still bullish. So if we just have to go through, it's like the whole Matt Walsh thing, the what is a woman? Let's go through what is a trend. Let's do this because most traders don't know. And so you have lows and highs. And then every low, if it's getting higher than the previous one, then structurally you're in a bullish trend. If every peak is getting higher than the previous peak, then you're in a bullish trend. So it's higher highs, okay, higher highs, and then higher lows, higher lows. Got it? So up until now, everything was bullish. except for right here. Right here now we have a lower high, where now the market is creating a lower peak. And so here's kind of the test, is that whenever you have a situation where you're creating a higher floor and a lower ceiling, you have a what? You have a wedge, right? It's a wedge or it's a channel. Typically, a channel is when the market is still creating higher highs and higher lows, but is doing so inside of this inside of like a pressure cooker. And then eventually the pressure cooker fakes up, comes in for the retest, and continues. With the wedges, it's the same exact thing. And so if the market's going to go bullish, it's going to fake up outside the wedge, it's going to peak back in, and then continue. And if it's bearish, what will happen is that it'll peak under the wedge, pull back up for the retest, and then crash. So right now we have this pressure cooker. We're basically just waiting to see if the market's going to hold support right here. I'm not really big into like trend lines. I'm typically more of like a support resistance kind of guy, horizontal, as opposed to these lateral zones. But I mean, you'd have to be an idiot to ignore the fact that you can connect the dots pretty accurately on a lot of these zones. You know, you can go 1, 2, and then little kind of blimp right here, little blimp right there. We can turn this down a little bit, kind of pitch this up right there. And so now we have kind of multiple confirmations where we have a lateral zone where we've had this massive reaction, and then this third reaction is going to be right at our ideal entry price at 17,735. So then when price gets here, typically the third time is usually the time it breaks. Okay, so I'll kind of give you guys that first example here. Okay, first time the market kind of started this uptrend, that was the first touch. The second time it got here, you had 3 touches, and then you had the takeoff. The third time, it kind of faked everybody out, and then pushed up once, and then broke through before it recovered. So usually the third time is when the market wants to do a fake out. And so for here, we're going to get the first reaction. That's the scalp. And then we're going to take the second trade and protect it in case it blows through and then recovers. Make sense? This might be a little complicated for some of you folks. If you're a chart addicts trader, this is another day in the office. Welcome to the jungle, people. Welcome to the jungle. This is trading. Okay. We have the super secret magnet indicator. Can't beat it, can't touch it, can't fight it. One championship this weekend was absolutely nuts. Haggerty got destroyed in the first round. Liam Harrison got knocked out. Not a good day for England. All that aside, nothing to do with Forex, but it does have something to do with some of you fight fans out there. We're going to talk about that at the very end. Now, super secret magnet indicator, undefeated, undisputed, is saying that the market's headed back up for a recovery, 103.9 or 103.7. So the DXY is the dollar index. It's basically tracking the US dollar versus a basket of the world's largest currencies. How is the dollar doing relative to the global currency basket? So right now we've kind of made a pretty sizable retracement back down to the 100.8. Why is the dollar crashing? Everybody, this is like Paul Revere. The rate cuts are coming. The rate cuts are coming. Everybody in the world saw that rate cuts were around the corner. And if you're going to flood the market with dollars, the value goes down. If you're going to flood the market with dollars and then make it cheaper to borrow them, then the value and the price of the DXY is going to suffer relative to other currencies. But we are still holding this support here at 100.8. And if we continue to hold this support, I see a recovery back up to 103.7. Is there any telling that we're going to break through 103 again and finish the target up at 107? Maybe this is not that time. But if we look at this structurally, this is a monthly support, weekly support, and daily support. And we've already had this sort of double bottom situation on the DXY where we're holding that zone. We have a double bottom, impulsive push to the upside. The impulse broke above these previous candles. And so we've created a new high. And then we just created a perfect Chart Addicts members. This is for you. A perfect retest of that super secret golden level. So on every time frame, this thing is gearing up for a recovery. I want to see this thing bounce. Beautiful wick rejection here with a double bottom. I'm betting on DXY to the upside. Now, because Euro USD is the exact opposite, it's inversely correlated. I have this beautiful Fibonacci sequence drawn from top to bottom here on Euro USD. We had the kind of a break through the entry zone and then a nice drop. And then now we just had a beautiful second retest with a wick rejection at that same entry price. And so what I'd be looking for is maybe one more touch. One more touch up at the 1.11, 1.115, or call it 1.116, 1.116. One more retest for this double top and drop. Euro USD loves double tops, and I could definitely see that one playing through. Now, to be honest, this thing might just be ready to go. This thing might just be ready to go. Nah. And either way, this is how Euro USD loves to move. If it crashes through, then we just wait for the retest, same exact price, and this is going to be our retest entry. So either way, I'll be looking for the double top retracement first. If it falls out the sky, then we'll just wait for the correction and catch the retest entry instead. Do not chase these trades, damn it. I know that my laptop's about to die. I think that we're going to basically call it a night here. It's great to see everybody. Click the link in the description to grab your tickets to the FX Summit 2024 conference. Use promo code ChartAddicts for an incredible discount on those tickets. Thank you, everybody who came out to Colombia. See you guys in London, Croatia, Barcelona, Dubai, Lebanon. It's going to be an absolutely banger year. And look forward to sharing it with all of you guys. If you guys were in the masterclass, keep an eye on your email. We will be rescheduling the day 5 Q&A. We owe you guys that last day. I'll make sure that nobody's going to leave this class unless you have all the information you need. Understood? All right. Crush it, everybody. Great to see you on there. And happy and safe trading. Peace. All right, y'all. My laptop's about to die. I'll catch you guys in a